Welcome to Sectors Up Close. I'm Elena Casas. Today we're going to look at UK-listed utility companies with Russ, Mould, Investment Director at AJ Bell. Poor returns and even worse publicity. That pretty much sums up the fate of most UK utilities over the past year. The FTSE Utilities Index has lost ground over the year, led by a more than 10% drop in water utility Severn Trent. United Utilities, SSE and others also lost ground as rising gilt yields pulled investors away from these dividend payers. Britain's water companies have been heavily criticised for piling up debt and permitting shareholders to profit at the expense of investment and the ecosystem. In contrast, Centrica was under the microscope after it profited handsomely from rising energy prices. Its shareholders were rewarded with a one-third rise in its share price as many Brits shivered at home. Well, Severn Trent, United Utilities and Centrica all report earnings this week, and to give me his outlook, AJ Bell's Russ Mould joins me now. Russ, hi.
Hello.
These aren't the most fashionable stocks, are they? But
No.
Are they attractive from a dividend hunter's point of view?
If that's the main rationale for holding them, you have relatively monopolised, oligopolised markets at least. They're relatively insensitive to the economy in terms of the stability of demand, and there may be some index linking in terms of some of their pricing, which can be helpful from an inflation point of view. So stable demand, stable cash flows, that means dividend yield. And actually they have to offer a decent dividend yield to compensate investors for the potential risks, because there isn't an awful lot of growth in there, let's face it.
I know you think these are no longer bond proxies. Why not?
Well, it's hard to tell, because after 15 years of zero interest rates, there's been nothing to really benchmark them against. But, you know, traditionally, what you've used to see was, yes, if bond yields go up, then utilities fall out of favour because their yields are less relatively attractive. If interest rates and bond yields come down, then people go looking for other sources of income, and utilities is a natural place. Now, what you also tended to see was, if we go into a recession, or the market's frightened of one, that's also when they tend to do relatively well, because, again, of the stability of their demand.
Water companies in this country, some of them at least, have made themselves synonymous with leaks, sewage spills and poor financial governance. So should investors be worrying about a potential regulatory crackdown?
Yeah, I don't think any of the water companies actually got an excellent rating in the last review from Ofwat. Most of them passed, one or two didn't, I think Thames Water being the most spectacular example. So regulation is a key driver, and we're just ending the AMP7 cycle, and the AMP8 cycle that runs from 2025 to 2030, that's coming upon us. All of the water companies have put their plans in, and it does look like you are going to see much higher capital investment, which may mean less cash flow coming out the other end, and probably slightly less generous dividend growth policies than the ones that investors have become accustomed to over the past few years. And on Severn Trent has already tapped its investors for £1 billion. So the money's going the other way, you could argue the wrong way from a shareholder's point of view, as they prepare for the higher capital investment needs.
How do you think that will play out across the sector? Because many say that tens of billions of investment are needed in this country to try and end these problems with the infrastructure of water companies. Yeah. Who's going to pay, shareholders or bill payers? 21st century country, Victorian 19th century infrastructure is a potential challenge. I think the companies in the end will be obliged to put more of their hands deeper into their pockets than perhaps they've been accustomed to, and that may in turn mean, again, less dividend growth and possibly the occasional rights issue as well. Yes, so there will be, I think, more strain on their cash flows going forwards. Let's talk then, Russ, about Centrica, which of course has benefited from the collapse of numerous other energy companies over the last couple of years as prices rose. They are now coming down. What's that going to mean for the company?
I mean, the company's already guided very clearly. Its results are imminent. It's already said the first half was really strong. The second half won't be as good because energy prices have come down. We've seen the regulated price cap come down, and that will have an inevitable knock-on effect. Also, it's a complicated company. It's best known for British gas, but it has a business in Ireland, it has stakes in nuclear power plants, and it also has oil and gas exploration activities in the North Sea off Britain, and there it's now subject to a windfall tax out to 2028, and clearly prey to fluctuations in the oil and gas prices, which have generally been down 10 to 20% over the last year. So second half will be nowhere near as good as the first, and analysts actually think that 2022 will be the profit peak for quite a few years to come at the moment.
Utilities, of course, are subject to a lot of potential political volatility, and we do have a general election coming up by January at the latest. What might that mean in this space?
Well, when Tony Blair won a crushing majority for Labour back in 1997, although he got in on the mantra of education, 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 he wanted to pay for that somehow. One of the first ports of call was a windfall tax on utilities. So nothing can be ruled out. That said, The Labour Party at the moment does seem to be quite keen to avoid offending anybody, or certainly trying to be as careful as it can to curry as much favour as it can. So there's no formal plan being stated for that. We'll wait for their manifesto, but it may well be proved to be, frankly, quite popular politics because, as you've said, a lot of the utilities aren't desperately popular here at the moment right now for one reason or another.
On that front, we're finding out that Labour are winding back plans to invest £28 billion in green infrastructure, including insulation. What does that mean for utilities? Are they going to have to do some of this infrastructure spending themselves?
It's not impossible. I'm sure that public-private partnerships will be one way they're looking at it, or it may indeed just be, we need you to get on with it, we need you to put your hands in your pockets. So perhaps then what investors could be doing is look at players who would benefit from that capital investment largesse. You know, SIG, for example, is an insulation specialist, and when it comes to the major infrastructure deals, Costain is a big player on that. Balfour Beatty is a big infrastructure player. I think it pulled out of water deals a couple of years ago. So there are firms that you can look at there who might be potential beneficiaries of any capital investment surge.
Russ Mould of AJ Bell, thank you so much for that insight. And that's your roundup of the UK utility sector. I'm Elena Casas, and this is Reuters.